What's up, everybody? Nate here. So the stock market in 2022 is going through a fundamental change, and many businesses, the Federal Reserve, and the United States federal government want to make you believe that this is completely out of left field, like none of them really saw this coming. But in all reality, this entire stock market plummet and economy headed into a recession has been 15 years in the making. Over the last decade and a half, the stock market has gone through a period of prosperity, but that entire era is finally coming to an end. We are starting to see all stocks on the New York Stock Exchange go way down, while interest rates are going way up. Businesses are now starting to struggle, along with inflation and easy money policies suddenly disappearing. Now, many investors right now are hopeful that these changes are just short periods of volatility, and once we can get some things back on track, the entire stock market and the United States economy will get back to normal. But in reality, this era ending is going to change everything we know about the stock market, businesses, and our US economy. And overall, it's going to usher in a new era of finance and investing. So what exactly is going on here? Well, today we're going to talk about all of the changes that are coming for the New York Stock Exchange and how all of those changes are going to affect the US economy in the future. But before I get into all of that, do me a quick favor and hit smash or destroy that thumbs up button below and ring that notification bell too. Both of those two things are completely free and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that. And now obviously the stock market and markets around the world have been crashing for the entirety of 2022, and there are two main reasons why. Number one, investors are worried about a possible recession, and number two, investors are worried about inflation getting way too hot in our economy. Now, we have overinflation in our economy right now because the Federal Reserve printed a ton of money over the last 2 years. In fact, they printed so much money that now 80% of all money in circulation was printed in 2020, 2021, and 2022. We went from having around $3 to $4 trillion in circulation back at the beginning of 2020 to now over 20 trillion. That, combined with supply chain issues from the war between Russia and Ukraine, China, and the pandemic, is causing a lot more inflation and price pressures for just about everything right now. Now, with that being said, we have recession concerns because of a lack of consumer spending. Many businesses have reported for Q1 2022 that they saw a lot less sales, and they're taking on additional costs because of supply chain issues and inflation. And inflation hurts the consumer because they can't afford to buy all of the same things they could before. They don't have as much money because everything costs more right now. In addition, our economy is getting restricted right now because of the Federal Reserve. They are pulling basically all of their bond buying and asset purchasing from the New York Stock Exchange, and they're raising their interest rates. So demand is going down for everything. It's a lot harder for businesses to buy things. It's a lot harder for Americans to buy things. And when you don't have that economic activity, well, you face a possible recession. Now, that has been a complete 180 from what we've seen over the last 15 years or so. Since the Great Recession of 2008, our economy has been in what's known as a financial repression. Now, a financial repression refers to everything that the Federal Reserve and federal government does to stimulate our economy, particularly government spending and corporate spending. Back when the 2008 financial crash happened, well, businesses weren't able to spend as much money. Americans were going through a recession because of massive unemployment, so there just wasn't that much money circulating in our economy. The Federal Reserve at that time brought down interest rates, and they also started a quantitative easing program on the New York Stock Exchange. They started buying corporate bonds and mortgage-backed securities and treasury notes, the exact same thing that they've done in 2020, 2021, and now in 2022. What this did was encourage government and corporate spending. Businesses started to get pretty risky. Investors started to get really risky too, so we had a bunch of IPOs start to launch. We had a bunch of businesses go from 0 to $1 million on the stock market relatively quickly, all while the Federal Reserve kept buying. They kept pouring more and more money into the stock market. So investors continued to get riskier and riskier. They wanted to make as much money as they possibly could, and there was a little bit of greed that was happening in the stock market. Investors were putting their money behind investments and companies that were unproven. They weren't making any money. These unprofitable businesses survived survived for almost 15 years because of debt and investor liquidity. And remember, these are businesses that at first made absolutely no profit. That trend continued until about 2018, creating a bubble like we have never seen in American history. Basically, any investment that investors were going to make was almost absolutely risk-free. All of that is basically now disappearing in 2022. But I mentioned 2018 because that's when the Federal Reserve really started to see this as a problem. They started to raise their interest rates and pull back a lot of their quantitative easing and did something called quantitative tightening. All that really means is they start pulling and selling off a lot of their assets, so there's not as much money going into the stock market or other markets around the world. They began raising rates and running off their balance sheet on Wall Street. And what that immediately did is basically what we're seeing now in 2022. Businesses started to sink, the stock market started to go way down, and IPOs essentially dried up in 2019. Overall, that created a situation where everything slowed down from a business perspective. Businesses weren't able to buy as many goods and services, and they weren't able to expand as fast as before because they didn't have as much money. Now, the Federal Reserve kind of got a little bit scared because they didn't want our economy to essentially plummet, because if businesses aren't growing, then that means they're not hiring as much people and there's not as much of a need for money. That means that inflation goes down, and we saw inflation drop in 2018. They were most worried about our GDP going down in 2018 and 2019, and in order to avoid that, they started considering lowering interest rates and putting a little bit more money into the stock market. That would again incentivize investors to get a little bit more risky and to put more money into the market in general, so everything basically starts growing again, albeit it's pretty artificial. We'll never really truly know what their goal was back in 2019 with their interest rates and economic policy, because at the beginning of 2020, we ran into the pandemic. Now, the pandemic really threw a wrench in all of the Federal Reserve's plans because they basically flipped again completely all at once. They instituted easy money policies, printing trillions of dollars, and in addition, they lowered their interest rates to 0%, a decade low. That unwinding all at once created a lot of economic prosperity right away. We saw the stock market go from crashing at its fastest rate to growing faster than it ever has in American history. Every single market became overinflated because there was so much money circulating throughout our economy all at once. The cryptocurrency market exploded, the commodities market exploded, and the housing market boomed in 2020 and in 2021. Everything was reaching record highs because the Federal Reserve was afraid that consumers were going to stop spending and businesses were going to start dying. And again, we'll never really know what happened because they instituted these policies. But now in 2022, all of that is beginning to flip again very suddenly because we have record high inflation because of all of that money printing. All of those policies are beginning to disappear, and we're starting to see the stock market tank. We're starting to see markets go way back down, but we are also starting to see inflation lower too. Meaning our economy is going through an intense shift, and there's going to be a lot of changes coming up. Here is what all of that means for our future. Number one, we're going to see a lot less government spending, or at least we're going to see a lot less government printing. We have way too much money in our economy right now, and the United States federal government and our country kind of needs to catch up to our normal pace. Case in point, if treasury bonds are not yielding high returns for investors, then they're not going to invest in that asset. They're going to look for a lot of other things. In addition, the Federal Reserve is selling off a lot of its treasury bonds, and it's not reinvesting. The only way that you're going to continue to see that prosperity is if investors step up or countries step up to start buying all of those bonds again. In 2008, corporations in other countries really helped because we didn't have that high of inflation and other problems around the world didn't really exist. But now in 2022, we're having a lot of these global inflationary issues, and other countries are running into the same problems of a possible recession. They're not going to want to invest in United States bonds, so we're not really going to see that. But the United States government still has to get its money from somewhere, so I anticipate taxes across the board going up for Americans. Not just the wealthy, but for the middle class too. I mean, the United States government is never going to stop printing money, and it's never going to stop spending money. I mean, that's what it does. But it's going to massively slow down its printing in order to keep inflation lower. There's really no reason for it to be printing a ton of money right now. But again, that doesn't mean we're not going to spend, so taxes will most likely have to go up in order to kind of make up for this lack of printing. And also, we could see the United States debt clock really start to ramp up in 2022 and beyond. They have to get money from somewhere, so they're going to take on debt from other countries or investors or corporations in order to get that done. That could create a lot of other problems a lot later on down the road, like our entire currency becoming devalued, but we'll cross that bridge when we come to it. Number two, we're most likely going to see a lot less corporate spending. So this is a very similar situation to what's going on with treasury notes, but the Federal Reserve has been investing in corporate bonds as well. All of that money is drying up, so investors and other corporations kind of have to fill the gaps, but they don't have the money to do that either. So businesses in general are not going to be able to grow as fast as they were on the New York Stock Exchange. You're not going to see those crazy high values continue to increase on the stock market. They have no money to really spend on their growth. They can't really increase their inventories because they don't have any extra money, and they're not getting any from sales, and they can't take equity in other businesses and help them grow because there's no extra liquidity. So I think immediately we're going to see a slowdown in IPOs. Companies are not going to be able to launch as an IPO because there's just not going to be a whole lot of interest in that in 2022 or in 2023. So with a lack of major businesses on the stock market, that kind of means that everything is going to go up slower. You're only going to have a few companies to choose from as an investor. You won't really have that crazy competition anymore. There's only going to be a few companies in those niches, and that's it. Keeping prices for assets and prices in general down in the United States. Number three, we're going to see a lot of businesses basically disappear over the next 12 to 18 months. Remember, there has been a ton of companies that have launched as an IPO or have started over the last 15 years or so that have not really made a profit. It was easy to invest in those companies because investors had low interest rates, so they could trade on margin. They could take on debt themselves, so it was a pretty safe bet. Those businesses aren't going to have that same investor interest anymore because interest rates are hitting decade highs. In addition, with a lot of investors kind of trading out their stocks right now, nobody really knows where money is flowing to, so there's a lot less liquidity on the stock market in general. I wouldn't be surprised if we see a lot of these recent IPOs or just companies that have launched over the last decade or so suddenly go private this year or next year. Many are going to have to downsize. They're going to have to cut their workforce, and we've already started to see that in 2022 from a lot of the major tech giants. And finally, many of them will flat out disappear. They won't be around anymore because they don't have a profitable money-making strategy. The only companies that are going to survive this are the ones that have strong fundamentals, the ones that actually are making a profit and have proved that they can do so over the long term. And then finally, number four, we're probably going to see a brand new business and financial world after all of this. Our entire business cycle is going to change because we have never seen this much money in our economy all at once, and all of that needs to disappear. Investors right now are trying to figure out what is going to protect them, and many of them are going to commodities and cryptocurrency and real estate, but many of them are also figuring out that pretty much nothing is going to protect you from this super bubble crash this year. That's because everything is coming down. Everything is overinflated in value right now because investors have been pouring their money into all different types of assets. Nothing was a risk, so everything got bought. And what you're probably thinking is, well, if the Federal Reserve just reverses a lot of its policies, then the stock market crash will end and our economy will prosper again, right? Well, that is definitely true. If the Federal Reserve reverses its policies and lowers interest rates and pumps money back into the stock market, then yeah, we're going to see everything continue to go up. It really has no choice to, but the Federal Reserve really isn't focused on that right now. They're focused on bringing our economy to normal by bringing inflation down. They don't really care about our economy. They want to bring inflation down in 2022. Inflation is a lot bigger of an issue because if we still have rising inflation, then consumers are not going to be able to buy anything. That's going to perpetuate the business cycle essentially shrinking and our GDP going going down as well. I mean, eventually we will most likely see interest rates come back down in the future, but they're not going to come down significantly. Most likely they'll just go down enough to keep things equal. They don't want to cause a situation like we saw after the Great Recession of 2008. They want to create an environment where investors can get a little bit risky, but only with their own money. They don't want to have to pump so much money into the stock market that everything becomes so overly inflated. That's what I believe they would have done back in 2018 if they were given the chance. So what you're ultimately left with is a lot less risky of a stock market. You have stable, slow growth for the long term, rather than this extremely fast and high growth all at once. What that means in general is that our economy and the stock market isn't going to grow as fast as it did over the last 15 years or so. You're probably not going to see as big of gains like you did after the market crashed back in 2008. What it does is create a kind of more natural economy where it's declining or expanding all on its own rather than from interference from the Federal Reserve. That's really what they want, is for businesses to be successful because they're a really good company, not because there's a lot of fake money being poured and circulated around Wall Street. Our economy has to be successful on its own, and it cannot continue to be propped up by the Federal Reserve or the federal government. All of that just leads to bigger problems down the road and bigger inflation issues as well. But what it's also going to lead to in the short term is our entire business cycle essentially flipping on its side in 2022. The way businesses grow is going to be completely different. The way the stock market grows is going to be completely different. And the way that we define success and look at investing in 2022 and beyond is also going to change. Once again, our economy is changing, and you've got to change with it in order to be successful. But now I want to hear from you on this issue. What do you think about all of these changes coming to our economy and the stock market in 2022? Do you think that our economy and the stock market is headed into a brand new era that is going to be a whole lot slower than we have seen over the last 15 years? Or do you think the opposite is going to happen? We're going to continue to see record highs in our economy and in the stock market in 2022 and beyond. Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.